Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And we are just about 2 minutes away from the end of the trading day and the trading week. Taylor Riggs, Katie Greifeld, Eric Balchunas in for Caroline Hyde, counting you down to the closing bells. And here to help take us beyond the bell in our global simulcast, we're joined by Massar and Tim Stenovec, bringing together Bloomberg Television, radio, and YouTube audiences worldwide to parse through some of the most crucial moments of this trading day. I think Eric Balchunas just said it best. What did you say? Buy the dip and let it rip?
No.
What?
Sell the rip?
No. Okay.
Wave at the ship? What was it?
Let me straighten this out.
Uh-oh.
Buy the dip is now sell the rip.
There
we
go.
we see this because the SQQQ is now trading more, and you see flows go into that. So what used to be buy the dip has now turned into sell the rip. Largely speaking, again, there are weeks and days here and there where it doesn't apply.
I'm gonna
but I
write
think
that
that's
down.
the era we're
I like
in
it.
now.
Okay. It's another new bumper sticker, T-shirt, hat, perhaps. All right, so no doubt about it, a different tone in the trade this week, and we are going to finish just off our lows of this session. Got a few minutes left. One thing that has certainly caught my attention is the VIX, the volatility index. It has jumped the most in more than 2 weeks. It's back above 20, just up about a point today, right now at 20.46. So we know, guys, right? Tim, volatility back in the market.
Yeah, well, speaking of buying the dip and thematic ETFs, we just talked to Sylvia Jablonski, the Chief Investment Officer, CEO, and founder of Defiance ETFs. She told us that we're unlikely to go beyond those June lows that we saw anytime soon, though she could see a pullback, perhaps if we hear something from the Fed.
Well, we have one for you. We just heard from Daryl Cronk over at Wells Fargo. He made the point that this is just a bear market rally, so that's what makes a market.
Katie, we take a look at these equity markets, and it is lower here on the day to end the day and to end the week. Of course, we are awaiting a lot of some of the volatility given some of the options expiry. We've thrown around sort of a $2 trillion number, Carol, as we think about that. But just to run you through the numbers, it's a Dow under pressure by almost 300, S&P off 1.3%, and a NASDAQ that's a real underperformer here. You're off 2% as well for the day.
Buy the dip, sell the rip. All right, the S&P 500, if you take a look, a little bit of a deeper look into it, 85 names in the index were higher today, 414 lower, 4 unchanged. So, Katie, definitely the sentiment was risk-off trade, no doubt about it.
Absolutely. If you look at some of the industry groups here, a lot of dipping going on. Not a lot of green on this screen behind me. You did see some love a little bit for some of those biotech and pharma names, but just 0.4% higher there. You also saw some telecom, energy, just about flat, but really there's a lot of red here, and it was the semiconductors down at the bottom, that down over 3%. Of course, semis had been the big outperformer, Carol, not so much today.
Yeah, absolutely. Not an outperformer today. But when it comes to some of the outperformers, the individual names, I found some good ones. First of all, Occidental Petroleum. You guys were talking about it. We were talking about it. This stock up almost 10% in today's session, and that has to do with Berkshire winning regulatory approval to buy as much as 50% of the stock. So Berkshire, Warren Buffett can move increasingly, if they want, pretty aggressively into this name. General Motors, also an outperformer, was up 4% at its highs today, finishing the day with about a 2.5% gain. After a 2-year hiatus, GM reinstating its dividend to 9 cents a share and also resuming its share buybacks and expanding that buyback program to $5 billion shares. So that got investors' attention. And then check out, it's been a big week, right, when it comes to the retail names. Check out Foot Locker. This stock up 20% in today's session. This is after naming retail industry veteran and ex-Ultra Beauty CEO, let me get it out, Mary Dillon, is going to be its next CEO. And there were a lot of analysts really weighing in on this and really liked it. B of A and Citi both upgrading shares of Foot Locker in today's session.
And we got more retail earnings coming up next week, too. So we are not done with earnings
we're not
yet.
done.
Well, I got some decliners for you today. Bed Bath & Beyond, we got to start there, closing down 41%. This is the biggest drop on record. We all know why it happened. Filing hit showing that Ryan Cohen is just out of there, done with Bed Bath & Beyond, made nearly $70 million on his investment in just a few months. Also keep an eye on Wayfair. Shares closing down 20% after the company said it's going to cut about 870 employees, this to save costs amid what it refers to as a slowing economy. The move represents about 5% of its global workforce and around 10% of the corporate team, the company said in a filing today, also making, quote, substantial reductions in third-party labor costs. And Robinhood finishing the day down by 9%. It fell after analysts pointed to a drop in July trading activity and a decrease in user engagement after the platform said it saw a 6% slump month over month in its active users, Taylor.
You see yields here, of course, Tim, as we continue to go cross-asset on this closing bell Friday, really moving higher. And I think this really sets us up nicely, Carol. So you think about Jackson Hole and some big Fed speak next week. You're climbing 4 basis points back up to 324 on the 2-year and climbing about 7 to 9 basis points further out on the curve at 10-year. 297 as we rethink about what a 3% on the 10-year really means, and also climbing on the 20-year. I think this was the week when we had a decent tips auction, I think, coming out on the long end, maybe on the 30-year. So interesting when we think about some of the long end demand, some of the foreign buyers, et cetera. So all of this yield focus really front and center.
I'm sorry, Taylor, but I'm just thinking about next Friday already.
Carol, look, New Jersey outlook to positive from stable to S&P. You're New Jersey. Look at that. Great news.
Yeah, that's because we're all paying more and more taxes. Of course, it's more stable. There's more income coming in. I am thinking about what we get from Jay Powell next Friday. We also have a bunch of economic news ahead of that new home sales, durable goods. But also on that Friday, we're going to get a read on personal income and spending. We'll get PCE deflator, so we'll get some inflationary numbers. So I do wonder, Katie, how Jay Powell and company is going to kind of roll it up into what kind of message for investors for the world, basically.
I am so excited. I mean, the next Friday is going to be such a fun macro event. And when you think about really, obviously, the bloom coming off the rose a little bit when it comes to the equity market, this bear market rally perhaps that we've been in, but still financial conditions have eased meaningfully even as the Fed continues to hike, continues to beat that drum that they're going to stay hawkish. It feels like Powell has to address it. I don't know what else he would talk about.
Bear market rally or new bull market?
I'm going to go with bear market rally, but I won't. I'm on vacation next week, so I won't really be tuning in.
You're not going to tune it. You're not going to be watching the close.
I'm not. But one thing, I'm an optimist, Katie, and one thing I want to hone in on is, Carol went over some stocks that we're doing well. One ETF that loves markets like this, when the 60 and the 40 down, is the IMDBI Managed Futures ETF. It's up today, up all week, up all year, 25%. Alts, this is a perfect environment for the hedge fund alt space, and some hedge fund strategies are in ETFs, as this one is having a big year.
Eric, you made a good comment earlier that I think a lot of investors right now are juggling, where just when you think that you like equities or you like bonds, you have to remember that this is a Fed that's hiking, and that every time you want to go in, how do you fight the Fed of not even a balance sheet runoff, but just in the face of these relentless rate hikes and the pressure that puts on equities? We were just hearing from Daryl Cronk, of course, of Wells Fargo, saying that could be another 6 months at least. So how do you sort of balance all of those push-pull narratives in the face of a Federal Reserve that's going?
I mean, again, I would be a zoomer outer. I would look at your last 10, 15 years of gains and go, well, look, it was bound to go down at some point, and just sort of let that get you through the night. But if you're somebody who just got into the market, it's got to be tough. I think you have to look for ways around this, or just dollar cost average.
How are we talking about the idea of a dovish Federal Reserve or some sort of pivot, coming in the next few months when we still have inflation above 8%, and we don't even know if it's moderated or if it's actually peaked? I mean, look what we got from the UK earlier this week.
Carol said 10%, right, Carol?
Yeah, I mean, tremendous numbers. I mean, I think we are all fooling ourselves if we think the Fed is going to start backing off at this point. If you just see those inflation prints, I mean, Katie, right? Like, until we start to see significant moves to the downside and actually get there and stay there, what else can the Fed do?
And also think about what backing off means. We've been hiking at 75 basis points a clip. Backing off could mean 50. It could mean 25. The direction of rates is still higher in that scenario. And you have to remember the balance sheet, too, gearing up to its maximum level, that runoff next month. I mean, if the Fed is tightening through the balance sheet, they're probably not going to go back to cutting rates. That would be totally unintuitive. So the direction of travel remains the same, it feels like.
Can I just jump in for a second? I also think the Fed has got to get rates up there so that when we do get to that next tougher recession, Taylor, that they've got some room to play with.
Well said. I think we asked that question earlier this week to our guests, and they said that that's a key thing of getting that runway. I will pivot to some of the corporate earnings. Caroline isn't here, but we're going to hear from Peloton, getting from some of those cost-cutting initiatives, the at-home assembly to help that company. Salesforce as well, a huge bellwether when we think about corporate spending and where we are within some of these big tech platforms. So I think those two are certainly some ones. And Zoom, right? Are we still Zooming?
Oh, we are still Zooming.
Oh, yeah.
In the hybrid environment.
By the way,
too,
one thing on Zoom, I don't know why they don't pitch themselves as a climate change fighter. I mean, how much could Zoom help in that cause? But I think it's, some of these earnings you're speaking of, I think are good. They are, I think, helping keep a floor on these bear market, these sort of when the rally ends and it goes back down, the floor isn't that low.
And you're going to be tuned in from vacation watching it, I know.
No, I won't.
All right, we're going to take this to a bar after this. All right, guys? Rounds on me. I promise. All right, that's a wrap on this Friday. Wrapping up the trading day and the trading week. Our cross-platform coverage, radio, TV, YouTube. We do it all on Beyond the Bell. Catch us on Monday, same time, same place.